Good afternoon. So everyone, I think we are starting the live stream now.
It's not live.
Yeah, I'm starting it now, sir.
So the question will come here on the Facebook.
It will come on Facebook, but he will put it here. Charles
Okay.
will bring it here.
Okay.
Yes.
Good evening, everyone. My name is Tausif Sheikh, and I'm the Corporate Secretary and Vice President with Indo-Canada Chamber of Commerce. This is a new initiative which is Indo-Canada Chamber of Commerce has taken for our members in this time, because it's a time of social distancing, but it's very important for right now that we should be also connected. So as a business chamber, we have taken this new series of webinars to basically inform our members how basically we are taking the initiative and what are the industry are taking the initiative to basically spread and basically decrease the curve of this virus in the market. And for that, government has also taken lots of initiative, and for that we have industry leaders today with us to basically explain us what are the initiatives basically banks are taking, what are the new changes coming to the banking industry, and how basically business going forward will be. And for this, we have today our panelist, and I want to welcome our first panelist, Mrs. Sandeep Goyal, CEO of ICICI Bank Canada. He will be basically covering on changing environment into banking industry, and also he will be covering on Canada-India corridor business, a high-level update on business side. Then we have our Raza Hassan, who is the Chief Risk Officer of HSBC Bank Canada for wealth and retail banking side. He will be covering on small business, and also he will be covering on retail banking and the measure and relief, basically how they can provide debt relief to their clients. And then we have Aditya Sapru. He will be basically covering on corporate finance, and also he'll be covering on government relief program, business credit availability, which is BCAP. Welcome, Aditya. So I will move my presentation to let us start this with Sandeep. So Sandeep, go ahead.
Thank you, Tausif. Thank you, Vijay. Thank you, Pramod ji, for giving me this chance to speak to this gathering. So I will take you through this journey. I think all of us went through this crisis as it is unprecedented. And I was engaging with some government officials in India in the morning today. And they were saying that this is a perfect storm where you have a health crisis unfolding, you have economic crisis, and a financial crisis. So nothing like this has ever been seen before. So in the bank, as a banking industry, I think we had a four-cornered impact, which as management teams, we were given this challenge to manage. So I'll just explain to you in terms of the frontline staff, which is serving our customers day in, day out, were exposed to the whole crisis on a frontline basis. So the priority for us has been to make this environment safe for the workers as well as for the customers who keep coming into the branches. And all services, at least from our banking side and all other big banks in Canada, I think have continued uninterrupted. We have made sure that we continue to serve the financial needs of the communities we serve. Second impact came in terms of customer engagement, because physical distancing is a unique kind of challenge for banks which are primarily based on customer interaction in the branches. Our bank is uniquely placed as our main client base is seniors and students, primarily from India. And in line with that, we set up a separate seniors help desk. All our branches are equipped with the seniors help desk because they require special services during these times. And students who are recent immigrants from India who are starting a new life here, and they need access to their banking services. So we had opened up special services to students, slashed off all our transaction charges for students to continue to have access to their funds. Third challenge, which I think we faced, probably unique to us since we have our back-end operations in India. And India had a sudden lockdown, which got declared in mid of March, as they were responding to the threat which they faced from this pandemic. But given the technology leverage, all our operations continued without any interruption. 70% of our staff in India is now working from home. All across big cities, small cities, we are technology enabled to work from home. Fourth, but not the least, I think essential leadership positions as well as the back-end operations within Canada. We had enabled 90% of our staff to work from home, and all operations continued. So it was a very multi-pronged challenge, which was thrown unprecedented. Nobody had a rule book to follow, but I think as an industry, we did quite well. In terms of the response to the economic package, which governments, both in India and Canada, I think have launched out, this crisis, as I explained to you, is very, very different. In 2008, I was in Canada, in Toronto, and I must tell you the kind of response which governments have given in this crisis is totally unprecedented. The kind of money flow which is happening directly in the hands of consumer, directly in the hands of businesses through banks, with the frameworks in place, I think it is unprecedented. It's very, very efficient. And we as a bank are fully enabled to work with the business customers who can avail all help. And any help needed in India also from a retail as well as business point of view is being provided. So next. In terms of post-COVID world, I just want to just summarize. In terms of post-COVID world, as we go through the crisis, I think banking system as a whole is quite liquid with sufficient capital to go through this crisis on a medium to short term or a longer term basis. And there is a very strong regulatory support. I think this time regulators were very, very proactive, both from Bank of Canada as well as OSFI, and in India in terms of Reserve Bank of India. I think they have been very, very proactive in coming out in support of the banking system as a whole. Workspaces in future, I think we are all adjusting to this physical distancing as a rule. It will be less and less based on physical interactions. I think it will be more digital. And digitization as a way, I think regulators have also come across in terms of enabling this from a regulatory point of view. Last but not the least, this is my personal prediction that China probably will lose some stature in terms of being a manufacturing hub, and we expect India to step up on the plate and become the new manufacturing hub of the world as we go through this crisis. So that's all from my side. Thank you.
Thank you, Sandeep, really for your insight. I really appreciate that. I also want to add that we have our President Pramod Goyal also. He will be doing basically a hard talk, and also he'll be doing a presentation on macro environment and monetary policy. So basically after Aditya, Pramod will be also doing that presentation. So for now, we are moving to Raza. Raza, please go ahead.
Thank you, Tausif, and really good to be here and talking about what the banks are doing in terms of the reliefs that they are providing to retail and small business clients. And I really agree with the comments that were made earlier that in this unprecedented crisis, one of the things that we have seen is how people have come together, not only as citizens or global citizens, but also the regulators and central banks have been extremely involved in making sure that they are helping the economy, helping the companies, helping the banks, and hence the banks overall have been able to see what they can do and provide support to their clients. And in terms of the personal side, one of the most important things that all of us have with bank is a mortgage. Roughly about 5 million mortgages are there with Canadian banks, and it's really one of the most important expense for a lot of us. And what generally the banks have done is all the banks have been very consistent when it comes to mortgages, and they are providing a relief of up to about 6 months. 6 months is the maximum. So if you have been impacted by COVID, you can call your banks. They will have a discussion with you and offer you a relief of up to 6 months. And that's really what's happening in the Canadian marketplace. However, important thing to recognize that this is a deferral. So it's not a holiday. So you still owe the money. And as the deferral happens, generally what that would do is when your term for mortgage comes to an end, you would have a longer amortization. If you expected to pay your mortgage over a 25-year period, because you've got a deferral, obviously it's going to take you a little bit longer than that to pay that mortgage. There are roughly about, so far, the banking industry estimates that there are about 15% of the clients or individuals in Canada that have deferred their mortgage. So it's not a small amount, but it's not a huge amount either, but something for all of us to be aware of. In terms of other credit, non-mortgage credit, that's where there's a lot of variation among different banks. So here it's important for you to talk to your bank and really understand what they are offering. Different banks are doing different things. Some are offering 2 months deferral, some are offering 6 months deferral. But generally, here, when you look at all the Canadian banks, they're roughly around 3 months of deferral that they offer as a start. So if you are having issues with your credit card payments or with your lines of credit or car loans, you can connect with your financial institution and they will be able to help you. So in the case of credit card, they will defer the payment. Let's say if it's 3 months, they will defer the payment for 3 months, so you don't have to pay anything for 3 months. But then after 3 months, the balance becomes due, and either you can make minimum payments or pay the balance off depending on your situation as to where you are. One important thing to know is from a credit bureau perspective, banks are reporting these deferrals as not past due. So they are still reporting to credit bureau that you haven't missed the payment. So that won't directly impact your credit bureau, but it's important to know that if you're not making the payment, your balances may be going up, and especially if it's an interest type of on a credit card or lines of credits, or they may not be going down as expected. So obviously that will have some impact to your credit bureau. Why don't we go to the next slide? So in terms of small business, one important program that the government launched on April 9th, and all of us who are very much involved in working with the government to come up with something, is the CEBA program. And what the CEBA program is, a Canada Emergency Business Account, where the government of Canada has set aside $25 billion. And businesses are eligible for up to $40,000 interest-free loan. So by that, what I really mean is you don't pay any interest. So this is a loan that if you take it now, you don't have to pay anything until December 31st, 2022. And if you pay it by December 31st, 2022, 25% or up to 10,000, if you have taken 40,000, 10,000 will be forgiven, and you only have to pay 30,000. However, if you are unable to pay and you still want to avail the loan, as if you are not delinquent, then banks working with EDC are able to extend the loan for another 3 years at a rate of 5%. There are a number of requirements, and I won't go through all of them, but important to know that if it has to be an operating business, you have to attest that you will be using this loan to pay for covering your operating costs. You can't use it to pay dividends to yourself or do non-operational type of work. As a business, you have to have had a employment income, so within wages that you have paid to either yourself or others of between $20 and $1.5 million, and you have to also make sure that you can only avail it one, and you have to do it through your main financial provider. All banks have very easy way of an application. All Canadian banks have really done it through website. You can go to their website and complete it. In Q&A, I can go into more details, but in the interest of time, why don't I stop here and turn it back to Tausif.
Thank you, Raza. Really appreciate your insight, and these are very valuable for our members. Now I want to move to Aditya Sapro. Aditya, please go ahead.
Thank you, Steve. I really appreciate the opportunity to come on this forum. I'm going to talk about a very specific aspect of the federal relief program, and it's called the Really, these are unprecedented times, and unprecedented times. It's really heartening to see that the Canadian government, both at the federal level and the provincial level, have taken really unprecedented steps to help Canadian businesses. So, what exactly is this business credit availability program? So it's basically a co-lending program between your existing bank and BDC, Business Development Bank of Canada, or EDC, Export Development Bank of Canada. All Canadian banks are participating in this program. So across the Canadian banking system, and each of you will have to work with your existing financing provider. So I think that's very important, and it's similar to what Reza said. It's you have to work with your existing. Good thing is the terms and conditions are absolutely consistent across. That's the best part. And again, we the government didn't want borrowers and companies to waste a lot of time with other banks, but they could go straight to their existing provider. So moving to into the nuts and bolts. So this is actually a $6.25 million program across BDC or EDC, and it's up to 6.25. So it depends really on the size of the company. BDC lays out various sales revenue thresholds. So I think there is a $1 million loan threshold for there's a $312,000 loan threshold for companies below $1 million in revenue. There's a $3.125 million threshold for companies between 1 million and 50 million, and above 50 million, it's really up to 6.25. So I'll spend some time on really the purpose of these loans, right? So again, much in line with what Reza had said, these loans are really for emergency liquidity purposes, and not meant for the shareholder of the business to take out distributions or shareholder loans or bonuses and things like that. These are really to sustain the liquidity in the business, right? Again, COVID has started, and sorry, let me just turn on my video. Sorry about that, guys. So COVID has started, and that's really put pressure on companies' liquidity, and that's really the primary purpose of these facilities. So I think that's very important that the audience understands that. How do banks like BMO evaluate these loans? I think that's another question which comes up pretty often. And again, similar to my comment earlier, it's really around the cash flow of the business. So your banker would usually ask for a 13-week or a 26-week cash flow, and that's important, that the business truly needs, which these programs hope to provide. Another thing that's important in these programs is the company needs to be in good standing, be satisfactory before the crisis happened. The government doesn't want to provide money to businesses that were already broken before the crisis. They want to provide, this support to businesses that were working well. Crisis happened, liquidity was under strain, and that's the whole point of this. Getting a bit more into specifics. So the BDC program is a term loan facility, and we'll talk about that next slide. But the EDC program is actually could be either a term loan or an operating facility, like an overdraft, right? So that gives you flexibility. In terms of the terms and amortization, the BDC facility is a guarantee that EDC will provide to your bank up to 80%, and that guarantee is for a 1-year term. It is also extendable for 4 times for 1-year intervals, so it technically can go up to about 5 years. While the BDC facility, because that's a participation facility, is for a maximum term of 10 years with a 20-year maximum amortization. Lastly, I think I would talk about is the security. So both these facilities, either with BDC or EDC, they're both secured credit facilities. However, they actually rank behind your existing lender's GSA, General Security Agreement. So they are secured, but they are behind your existing lender security. Which is why you will also find that the pricing and the fees on these two facilities, they tend to be higher than what the existing pricing is on the company's existing credit facilities. So I'll probably stop here and happy to take questions in the Q&A.
Thank you, Aditya. I really appreciate your time. Last but not the least, now we want to move to our President and Board of Chair, Mr. Pramod Goyal. Pramod, please go ahead.
Thank you, Tosi. Very good afternoon to all the fellow panelists on this webinar, and a very warm welcome to all those who are connected with us on this webinar on behalf of ICCC. I briefly wanted to just give a broader perspective of the monetary policy, the macro framework, as I would say, just an overview, quick from a layman's perspective, so that all of us are able to follow, without getting into the technicalities. The Bank of Canada, the primary mandate for its monetary policy is to keep inflation low, and to the target that it keeps to maintain, and also to stabilize the economy, provide necessary input for maintaining the employment and so forth, and the credibility, liquidity in the credit markets. So now, as a result of what we are seeing, this unprecedented situation of this pandemic we're talking about. So what is the direct impact on the economy? Of course, it has been hit big time, not locally, but nationally, globally. So everything is shut down. And added to that is the lower gas prices, the oil prices, as a result of which the Canadian economy has significantly contracted. And it has done so in a very short span of time because of this pandemic. This has gone in from just days and weeks into that contraction. The recent study by Bank of Canada, its own analysis, shows that the first quarter, in fact, the lockdown started in the middle of March, so it had not impacted the economy to that extent in the first quarter, but still it went down by almost 3% during the first quarter. And now what is expected in the second quarter, which will bear the most of the brunt, anywhere between 15 to 30%. That is internal Bank of Canada assessment, and the numbers could be much higher depending on what the outcome is later on. Because as we still continue to be in lockdown, the oil prices remain low. And of course, as I'm saying, so the double whammy for Canada is because of the extra expenditure that the government has to bail out and infuse a lot of money to support the system, plus continued downfall of the oil market. So in terms of this overall situation as to what the Bank of Canada is doing to address the situation, so definitely they lowered down the interest rate. There were 3 back-to-back cuts to ease credit position for borrowers, to ensure that a common person, every household and businesses who have access to credit, the cost remains affordable and they can manage during these times. And of course, the second aspect is to manage that increased demand for near-term financing or liquidity, both at the federal level, the provincial level, and of course, onto the businesses through financial institutions. And till last month, the Bank of Canada has already channeled $200 billion in the core market funding to address those temporary liquidity needs. And moving on, if you look at what is the impact on and what has been the measures adopted by the Canadian banks? I mean, talked about the macro picture and what the banks are doing. I mean, of course, Canadian banks have been seen to be one of the strongest globally. We've seen that in the past economic crisis. And just to give you a perspective, when the economic crisis, the financial crisis happened in 2009, and so the banks held lower capital. Comparatively, if you look at the numbers, it was 163 billion at that time, and at 2019, it was 336 billion. So definitely, they are much stronger compared to the previous occasion when we had some sort of financial crisis. And even if you look at the current provisions for credit loss among the Canada's largest banks, the six largest banks, is just slightly over 10 billion. It's not something which can be amounting to be concerned of. So I think the banks remain very strong. Just to ease out further pressure, I talked about the $200 billion that the Bank of Canada have arranged to put into the system. They've also eased on the term repo facility that is allowing the banks up to 24 months to basically save on their high interest long-term funding costs to maintain a lower base so that the pressure on the long-term mortgage rates is lower. And of course, as I mentioned earlier, I mean, the interest rates have been slashed. So basically everything is intended to give a lower credit facility, credit exchange for the borrowers that the banks can afford. In terms of the banks having taken initiatives on their own, besides what the government has asked them to do in terms of playing an active role in all the major schemes that the government has launched. So banks, of course, are playing a very specific role to extend that to the consumers. The banks have also announced temporary reduction in credit card interest rate. I think as I was mentioning in his presentation. So banks have taken that initiative on their own in terms of reducing and facilitating credit card debt for borrowers during this pandemic. And of course, I mean, the Canadian banks have been all supportive of various government schemes that have been rolled out, whether it is for direct deposits or for passing on the government benefits that are sin-based that are going into the consumers. And the system has been so fine-tuned that it is only taking 1 or 2 days from the overall process when it is initiated by a consumer to get those benefits, and the CRA or the government, addressing that, approving it, and flowing through the banking system to the consumer. So it is pretty fast-tracked and working very fine. So all the credit to the banks that have been able to cooperate with the government in extending all sort of help to the consumers. So I think in short, yes, the impact would be severe on all the banks in terms of profitability, in terms of what they would, and in the manner that they do business now, since the retail banking, because of social distancing, as Sandeep was also mentioning earlier. So it has changed the entire model of functioning. But I think since they were all very aggressive on their online and e-commerce facilities for last few years, they've been very aggressive in terms of marketing that. So that has come in handy at this time. So they were able to contain all the flow that has come in. So I think I'll leave it at that, and then we'll move on to other sessions. And if anybody has any questions, I'll definitely be taking up.
Thank you, Pramodji. Really appreciate. Clearly, for banks, the coronavirus crisis is forcing them to basically compromise on their profit and dragging these profit. While these reduce like interest rate regime and like defer on the mortgage payment, basically saving even clients, even overall Canadians from default also. So really, I'll say what government has announced and the bank are implementing what at the ground is really very commendable job. Thank you. We are now open for Q&A. So the first question is for our CEO of ICICI Bank that uh, one of the client wants to know basically how secure WhatsApp would be. Sandeep, for you.
Yeah, so this is a new facility which the parent bank has launched for our NRI customer base all across the world. So it works on a very secure platform. So there is a validation process which you need to start by sending a text to a particular number. So what I'll do, Tausif, is I'll share the full flyer with you, which you can circulate internally. And it is for use for all NRI customers across Canada.
Sure, that is definitely a good help because our lots of our membership is like basically NRIs and they do bank in India also. The second question, Aditya, is for you that there is a client, he basically visited the branch, but he's not an existing client of Bank of Montreal. So he's looking that if Bank of Montreal can help in this crisis time, or he has to visit to his local bank. So if you can put a light on it.
Yeah, thanks, Tasif. Unfortunately, the policy around all the programs is customers need to approach their primary bank. Right? So unfortunately, wherever this person is banking, he or she will need to go to his existing bank, and they will be able to help him across these programs. As I said, the program is consistent through banks, so there should be no difference between what BMO is offering versus other banks. Thanks, Asif.
Thank you. Moju, do you have any question? Or I'll go with the question which our membership has sent basically. So I'll go with one more for Raza. Raza, what you expect that is there be a deflation in the economy because that is expected in China that would be more harmful, or what do you think as per the clean economy is?
Yeah, well, that's a good question. And I'm sure I'll speak for a lot of you. You know, as you look at your businesses, you are thinking about how is the economy going to be. And what I can tell you is, as a banker, and I'm sure my banker friends that are there, we're spending a lot of time in terms of saying, okay, what would this economy end up being, and doing a lot of stress testing in terms of, well, will it be a V, U, W? I think today there's a lot of headlines going that it's going to be whoosh. So I think what the consensus is that until we really have a vaccine, and if we do have a vaccine or a treatment, things will go back to will somehow go into how things used to be. But that is not something that is very likely in the short term. It is going to it is going to take time to get to a vaccine or a treatment. So I think the general consensus is that we are going to see a significant reduction in GDP in Q2. And different economists are saying different numbers. I think Pramodji talked about some numbers, and they keep on changing every week. But Q2 is not going to be as good of a quarter from an economic activity perspective. However, as now each of the provinces are relaxing or aiming to relax things, we should see things starting to get better in Q3, Q4, and as we move forward. But it is going to be a gradual comeback, hoping that there won't be another second wave. So it's important that we are all being careful to make sure that if we are doing social distancing, that things and we can start reopening things, which will help to bring things back in a gradual way. But I guess coming it back to individuals, I think I think in a lot of South Asian culture and immigrant culture where it is about saving, I think it is some things like this is teaching a lot of the people, and I think you're going to see more of that we are seeing consumers being more cautious. The spending habits have really changed, and a lot of the banks are seeing decline in credit card spending as people have been a little bit more cautious. So I think we are going to see consumers being more cautious as we move forward, and I think savings, people being a little bit more focused on savings than perhaps they used to.
Thank you, Reza. The second question we have from Facebook is from Kate Wen, and she's asking this coronavirus situation, whether it's going to be a crisis for bank, that they will be all merging together, so there will be less competition in the banking sector. Anyone?
Maybe I can take it.
Okay.
I think, as you know, in Canada has, and now I'm speaking more from a Canadian bank rather than HSBC. In terms of Canadian banks, Canada has 6 dominant banks, and there are Canadian banks generally are very well capitalized, and as was alluded earlier, would the Canadian banks see more losses? Absolutely. I think Q2, as the banks report, they will be reporting higher losses. But I think as Pramod ji was just going through the capital ratios of Canadian banks in general, we do have a very active regulator, OSFI, who regulates all the banks, and they have done a very good job of making sure that in good times, banks have put aside a good amount of money for these types of situations, and they are well capitalized. I don't personally see that we are going to be suddenly seeing bank mergers in Canada, but that's just my personal reaction.
Thank you, Reza. There is one more question for mortgage interest rate. On the deferral payments, is it the rate of interest rate will be calculated on compound rate basis?
Yeah, so on the deferral, the banks will continue to calculate interest based on what the contract rate is, and you will have to pay that. In terms of whether you are paying interest on interest, different banks have different policies, so you have to connect with your bank. Some banks are compounding and there's interest on interest, some are not. So it will depend specifically on an institution.
Question for Raza and Sandeep both from Dhruv Mahajan. He's asking basically, is it we are heading towards negative interest rate regime? What would be the impact?
Yeah, I will take it, then Raza can add because Raza has a much wider view on this. So negative interest rates, I think, has been discussed between all banks and regulators in terms of getting banks prepared for it. But from a macroeconomic point of view, I don't think so. A negative interest rate environment is warranted in current climate. But Raza, you can please add.
Yeah, and I think I would just concur and say that yes, there are some countries, especially as you're in continental Europe, that have gone through negative interest rates. In Canada, it's not expected, but what you do see is that all the banks thinking about it and making sure that their systems can deal with it. And I know within the banking industry, there's been a lot of discussions, and I'm sure some of our audiences are into consulting or IT. I know all the banks are making sure that their systems can deal with that kind of situations, and if not, what they need to do to enhance their system. Hopefully there's not expectation that we will get to that, but all banks are thinking about it to make sure from a systems perspective they are ready.
Thank you, Raza. The question from Mohan Chawla from Facebook, new norms will be interested to learn about the vision of bankers regarding new norms. Basically wants to know what would be the new norms in banking with this coronavirus.
I think from a ICCC bank perspective, both from India and Canada, I think more digitization and this movement away from branches, I think will be a new norm. And I think regulators had their own complexities to take care of in a digitized environment, but I think they are also coming around and realizing that if physical interaction might not be the thing of the future. So I think from a norm perspective, 100% digitization move is there.
Thank you, Sandeep. I have a second last question, which is from uh, Sam. He's basically want to know, is it there will be a crisis in the housing market or commercial real estate in coming 6 months because of this coronavirus?
So maybe I'll take and then please others jump in. I think if you look at the housing market, and again, it's very difficult to predict these things. What we as bankers can all do is to make sure that, and all of us do a lot of stress testing to say, if this happens, what would we do? If this happened, do we have adequate capital? So as bankers, we do a lot of those kind of stress testing to say, if housing market was to fall by X%, do we have enough capital? And all of us as an industry do that to make sure that we are well prepared. In terms of just going specifically in terms of positives or negatives on the housing market in Canada, as everybody knows, has done well. I think the long-term prospects for Canada and Canadian housing market, it continues to be good, given the kind of country we are, the fact that going into this crisis, we did have a shortage of housing. So there are a number of positives that were there as we were going into this crisis. But I think one of the things, obviously, with this crisis, it will put some strain on the housing market. But what you are seeing in the numbers is, if you look at the April numbers in Toronto, the housing sales were down 63%. In Vancouver, they were down roughly about 45% or so. But at the same time, you saw immediately a decline in new listings. So the listings went away too. So from a market perspective, the market continues to be in a balanced territory. So far, we haven't seen anything major from a price correction. And as long as the listings continue to be out of the market, that they should provide some support. But based on the economic fundamental, you could see some softness in the market. And most of the economists in Canada are predicting, about 5 to 10% decline, but in that range. It's not like a 20 to 25%, but that kind of a decline is what most of the economists are suggesting. But I won't touch on commercial and maybe let someone else to talk about it.
So I have also a follow-up because of this new norms that everyone is working from home. What is the future of real estate in commercial side or housing, like basically offices and all that?
Yeah, so on the commercial real estate, see, it's a matter of conjecture that people think that work from home in a current environment will become a new norm and there will be lack of office space requirement. I think office spaces will get redesigned to suit physical distancing and safety requirements. But will there be a precipitous decline in office space requirement? Could be for a short term, but I think on a medium to long term basis, I don't see there is a office space decline in the projection.
Thank you, Sandeep. And my last question is from Chetna Desai. She basically wants to know, because all the central bank globally, they are pumping money in the economy. So how you are seeing that it would be inflation or deflation in the market, or and also she wants to know what would be the US dollar conversion rate would be in terms of Canadian dollars and US dollar and to other currencies.
See, macroeconomic forecast in this kind of environment, I think everybody knows these incentives are being funded through deficits from the central governments. And from a short to medium term, we can all expect that these will be funded out through tax increases or printing of more money, which we call deficit financing in macroeconomics. So inflation rates will continue to remain low, interest rates will continue to remain low as I think governments try to restart the economy. And USD exchange rate is a tough question to answer, because USD I think is a safe haven currency and has a lot of factors which go in favor of USD. So it will continue to harden as per my understanding.
Thank you, Sandeep. Now I'll move forward and I'll go to Pramodji again. Pramodji, please go ahead for your hard talk.
Sandeep ji, let me ask you a question. During these difficult times, people and businesses, they all expect banks to deliver, come forward, provide relief. And of course, as I mentioned earlier, Canada's big banks, I mean, they've been forced by the federal government to play a role in terms of whatever is being rolled out. Besides small things here and there, I haven't seen something very significant that would have come as their own initiative from the banking industry. Something, if I talk about from a consumer standpoint, something about like a small gesture about waiving monthly bank fee on accounts for a few months during this crisis could have helped a long way. I haven't seen any of that stand being taken by any of our mainstream banks. So is it because that the banks are concerned about their earnings in the shorter term because of other shrinking margins, or there is something else that we as a commoner don't see? What do you think?
Yeah, so Pramodji, good question. So this transaction fee concept, which I think banks have significant non-credit fee, which we typically call inside the bank, is primarily driven from the cost structure of the banks. So you see, they are sitting on real estate, they have to pay expenses of employees, there are technology depreciation costs and modernization costs which go into. And typically, I think these fees take care of those costs. So, like I think from our bank side, we have waived all our electronic transfer fee payments. Typically, our students use this service. So we have gone ahead and made these service fees zero. But you're right. I think from a fees perspective, banks have been trying to see what they can do. But I think credit card interest payments they have cut, and I think there will be a relook at all the fee earning models which the bank have in place. I think that consideration is there within our bank, and I think across the banking industry.
I see. Okay.
I'll probably add there on the commercial side if I could. I think yeah. So I think on the commercial side, banks have actually proactively offered relief on payments. Whether it's 3 months or 6 months, and even though that's not mandated by the government, I think the banks have been across the board. They've been very accommodative from principal payment relief. Also from a covenant relief perspective, if there are larger customers and they have larger credit facilities. So I think the banks are doing a lot right now from a relief perspective, and sometimes it's all about forums like this to talk about these. Thank you.
Sure. Thanks, Aditya, for that clarification. Just a follow-up to that. I mean, we heard from Raza, and we know that there have been banks have responded to the need by accepting payment deferrals on mortgages and credit cards. And of course, I mean, as we talked about, and I also mentioned, they have been kind enough to slash some of the interest rates on credit cards to help people through this crisis. But I think my understanding is like all of these are temporary measures that have been ranging from 60 days to 120 days, whether it is credit card deferrals or mortgage deferrals, which ultimately the borrower would come up, has to come up after the payments get normalized back after this adjustment period. So, and as we are also seeing that this lockdown, even though when these things were planning in the planning stage, March and April, we never expected this will go and drag on for this long. So we're still in the lockdown, hoping that it'll get, to open in phases. So would this short-term relief, 60 to 120 days on various segments, would that be sufficient? Do we see any fallout, bigger fallout, when the support payments diminish and people are still not able to come back to their normal terms, or the banks are considering something new? Is there something in the pipeline, Raza? I mean, do you think?
Yeah, so I think if I could answer, and I think Aditya did it. I was about to jump in to say there's been a lot of, although both of us talked about some of the most standard programs, but banks are also, especially on the commercial side, doing things. So Aditya touched on it. In terms of on the personal side, again, what if you remember, we all went into this lockdown thinking it's going to be like a 3 weeks lockdown, and then slowly people will be coming back. But it's been like 2 months, and we're still in lockdown. So I guess a lot of these relief programs, as they came in, they were looking at, what could happen to the economy. Let's try to get things done immediately. So you would, as I mentioned, the mortgage program is much more, the banks worked with CMHC, Genworth, and Canada Guarantee and came up with some of those. But on the unsecured side, it's pretty base. It's not, every bank has it slightly differently. But I expect that, as we move forward and as these deferral programs come to end, and I can tell you, I'm spending a lot of time personally and working through with industry in terms of what would that mean after that. And I guess none of us know that, because we don't know how the economy is going to be in 4 or 5 months. But if things, the hope is, as the lockdown eases and the economy starts to get better, some of those clients would not need the deferrals and will be fine. But some probably would need the deferrals. And I would expect that all the Canadian banks will come up with something to make sure that we can address that and help our clients. And I think that's kind of what you will see, because it's in no one's interest to not work with the client. It's always good to work together and find a solution that makes sense.
Right. But to that note, I mean, I was just looking at some of the numbers. Uh, like if you look at, again, consumer side, I mean, not the commercial side, we look at the total number of issued credit cards in Canada, which sit around close to 80 million.
Yeah.
And but we are also given to understand that, okay, 70% of that number always pay their balances in full every month. So it's only the rest 30%, which will translate to about, say, 24 million cards that carry balances.
Yeah.
Now, the number that I saw in your presentation was about roughly, say, give and take, 350,000 credit cards, as per the last numbers, were the ones who opted for or requested or were approved for payment deferrals. So that is hardly, 1.5% of the total cards that carry balances. Whereas on the mortgage side, we saw about 15% of the consumers got approved or requested for deferral payments. So is there a possible disconnect that we are seeing, or is something else?
Yeah, I think there's something else, and the something else is as follows. As I was talking about, for most of the Canadian, the mortgage is their biggest payment, and I think what you are seeing people do, and is in this crisis, everybody has been very much thinking about their mortgage to make sure that that payment. Everybody wants to make sure that they're living in their house, so that payment is not impacted. So I think you have seen people that have been, as the unemployment rate has gone up, people are calling to say, hey, I would like this mortgage to be deferred. And just so you know, I think I would be speaking on behalf of all the banks to say that banks haven't really, on the consumer side, unless you were somebody that's not really impacted by COVID. But if you are impacted by COVID and you can talk to your bank saying, hey, I was impacted, the banks generally are not doing any verification check. But after a quick discussion, if that's the case, then they've been fairly much open to granting that extension. So hence why you see the bigger numbers on mortgages, as people have been calling. We haven't seen much on the credit card. Like, we don't, I think consumers, what they have done, because they have reduced their spending, I think that's where they've been able to manage their payments. And given the fact that the government has these programs that where if you're a husband and wife and we're working, you're each getting $2,000. There's a child benefit that's coming into. You're finding that Canadians are able to manage that and manage those payments. We have not, as an industry, seen as many calls on the credit card side as yet, which is a good thing.
Yeah, situation could change once this government support payments are withdrawn or they start to fade out. That could be different. Okay.
Yeah.
Thank you. One final question, Vijay, before I hand it back to you. It is for Sandeep, and then maybe I can ask the other participants as well. What we see is the current crisis will have, long-lasting implication for the economy, for employment sector, for consumer behavior, and in general, the way people work. So what is your take as to what key impact this pandemic would leave on the banking sector?
Yeah, Pramod, I think, when this crisis hit in 2008, the big financial crisis, I think there were a lot of learnings on the bank side, and collectively as a ecosystem, I think we learned a lot. I think regulators learned a lot, central banks learned a lot, and banks individually learned a lot. And as a response, I think a lot of regulatory changes were implemented in terms of buffering, better liquidity measurement, better buffers for liquidity, better capital buffers. So all this we are seeing today, I think we are getting comfort that the banks are well capitalized, highly liquid. It's primarily coming out of learnings emanating out of 2008. So what I see is as we go forward, I think as banks and as an ecosystem, I think we have learned a lot. And we are learning. We have always academically thought of a pandemic response, but we are now actually grappling with a actual pandemic response and how does it work. So I think going forward, you will see a series of regulations which will be coming collectively from central banks as well as regulators to make sure that any kind of systemic crisis, if the bank sees in form of any pandemic and anything which affects globally every country, so then I think how do we respond? I think we'll be all smarter out of this.
Sure, I guess. Thank you. Okay, Vijay, I'll leave it up to you to summarize and wrap up the webinar. Thank you.
So thank you very much, Pramodji. Thank you very much to our panel. On behalf of the ICCC, would like to thank our panel, Raja, Sandeep, Aditya, and Tausif for being our moderator, and Pramodji. Also, we have our technology partner, Tangential. We would like to thank Tangential. We have, people from Tangential that are helping with this. So thank you very much, everybody. And we really look forward to more participation from people in our audience going forward. Those of you who have participated for the first time today, welcome to the ICCC Thursday Talks. For any of you that have joined for the first time, ICCC Thursday Talks, thank you very much. And if you need to know more for enquiries about today's webinar, if you want to know how to become a member of the ICCC, or if you want to know about the Small Business Assist Program, please write to iccc@icconline.org. We have Thursday Talks every Thursday at 4:30 p.m. The next one is going to be on COVID-19 and travel, tourism, and hospitality. So we look forward to having many of you on that session. So thank you very much again. Stay safe and see you next Thursday. Thank you.
Thank you.
Thank you.